Hey guys, this is Simon with Trade and Perform Coaching. So I want to do a quick and brief trade review both on ES and CL. Both provided us with trading opportunities, and those opportunities came from three things. First of all, the price action. Secondly, pre-planning from the market. If you've been following us now for any period of time, you'll see that we have both a pre-market planning situation and a post-market review, and there's a homework component of that. Being prepared to identify what trade you are looking for, right? Being tactical in your trading decisions, right? Using discipline, having a process. It's all about process, right? Because process is when things start to go wrong, you can compare what you've done versus what your process is, and then find out, hey, am I executing properly or am I executing improperly, right? And where do I have to make changes? If you're trading without a process, without a detailed trade plan, which most retail traders are, right, you are exposing yourself every single time to randomness, and randomness usually equals losing money. And the number one message I have for all retail traders out there is don't draw down. Take your time, learn the craft of trading, right? And then there's as much money as you are skillful enough to pull out of the market as you could ever want, because these patterns all repeat over and over and over again with small variances, right? Takes some time to learn. It's not easy, right? It's not a gimme, right? But it is available to you, and the opportunity is there, and that's what we're trying to take advantage of. So let's jump in really quick. Before I do that, I need to read the disclaimer really fast. This is my least favorite part of the whole day. Legal notices. Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in futures and options markets. Absolutely do not trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. What that says, folks, is if you don't know what you're doing, don't trade. That's the summary, right? And I firmly believe that. You can learn how to trade properly. You can learn how to be consistent. So let's start off the day, right? So if you looked at the trade review from last night, you would have seen that, first of all, shorts were off the table, and we discussed that for multiple reasons. Top 1/5 of the range, buyers are in overall control. ES has been in consolidation. We can see that here, going back again to the volume profile. Let me pull this up really quick on ES. Right, you can see we're still in this consolidation. We closed right at the tip tomorrow. A gap up tomorrow would be very, very interesting. A gap and failure to fill that gap would be very bullish to the upside. This was actually a pretty good close. It was a short covering. You see that P shape that we have there? Here, let me make this a little bit better. You see this P shape profile that we have here, right here. See that, the letter P? Right, that's a short covering profile, but a lot of times that short covering profile, so one or two things will happen, right? You can see when we close right into that short covering profile, a gap away from that, and this would become significant resistance, right, for a push lower, and a gap above that, and there's nothing above. You have the old 24-hour high. I think it's sitting at 2403.75 or 04.75 as resistance, but there's really not much above, right? The other thing that we mentioned, and it was important to note, and I tweeted it out this morning, was that the market has been trying, the important question we're asking every day when we come in, and by the way, the CL trade review will come at the end, ES first, CL second, right? The important question we're asking every day is, what is the market trying to do, and how good a job is it doing at doing that, right? And the market, if you look, clearly, we are trying to go up. Everything is angled up here. Higher lows. If you look at the hourly, we have higher highs and higher lows on the hourly over the last several days. The market's trying to go up. It's doing an awful job of getting that done. Given we knew that Monday and Friday is the narrowest range days of the week on average statistically. So I didn't expect it to trend up today. It would be very hard for it to get it done today. Maybe tomorrow, but not today, right? So think about what we knew. We knew buyers were in control. The range is restricted, right? That we didn't want to be on the short side of the formula. The short side was the harder side, right? So you already got 3 advantages right there. You kind of have a general idea of where you want to focus your energy for the day. So when we come in on the day, right, the first thing that we'll notice is, if you looked at the video from yesterday, 23.95 was the upside target. We came within 2 ticks of that. For the Globex high for the overnight session was 23.94.50. Then we rolled back down. On the open, we opened up, and we opened up below Globex high, but we had essentially a very strong first 5-minute bar. So we're just going down the check down sheet for when we have potential trend days up or range extensions, right? So we gapped up. We didn't have half gap. We didn't have gap fill. That means the market would have come all the way down in here and filled, right? And importantly, after this 5-minute bar was formed, we couldn't trade below it. So immediately I know I can stop and go, wait a minute. I don't want to be short. Buyers are in overall control, and I want to find a way to get long. This was our first area we identified statistically as having a good chance of having a good risk reward and a push-up. The downside to taking a trade right here is it's hard. It's the first 5 minutes of the market, and if you're not really good at reading the setup, meaning a gap and go type setup, you can think a lot of gaps end up looking like they're very strong and end up coming and filling you and giving you a very fast stop. Even though this was a valid entry, I would not look at anyone and go, well, you were crazy for not taking it, and this is the reason why. You have to know who you are, what your risk parameter is, and how many trades you can take consecutively. And what I mean by that is this trade, this if it had come in, and I said this to the members in the room, right? If we had come in and just simply gotten half gap, it would have stopped this trade out for me here, right? And you have to know that the highest odds trade that we look for in a room is a rotation down of 6 to 9 points in this environment. It used to be 10 to 15, but we've just gotten crushed on rotation, right? And then some type of tick divergence, or preferably another test of the lows that fails for a U-turn back to the upside. This is the focus of my trading, right? That's not this, right? So this falls out of this parameter. And so someone said, hey, I really want to put the highest odds on my side. That means in ES, you need a rotation down, right? Secondly, in order to get price action on your side, you have to give the market a little while to open up and actually operate, right? So the key here was, at minimum, you knew the gap up and the strong close, not to short it, right? And if you fall into this parameter of waiting for this rotation down anyways, which is your highest odds setup in ES, then you're not going to be worried about shorting this bar anyways, right? So next, we pushed all the way up, and you can see we finally came into a 0 tick right here, right in here. And this had all the characteristics of making a 0 tick trade work. We had upside push. As the tick opened up strong, as the tick came in, price actually went up to sideways. That is a perfect 0. There's more details to it than that. We obviously go through it in the room in detail, but that is pretty much a perfect 0 tick entry, and that is what we're looking for when we're looking for a 0 tick trade. That was entry number 2 on the day. And then the third entry was our momentum entry off the momentum indicators, and I'm going to pull that up really fast. And if you'll look, let's get out of drawing mode really quick. I'm 8 minutes in and I haven't gotten to CL. Trying to really cut these down to 10 minutes. So if you'll look, the first clue this morning when we came in at the open, let's see if we can open this up, right? So the first clue was already by 8:30 open, we were above the 20-period moving average. Yeah, that's correct, moving average. And this is a substitute trend line for me. I know when we're above the 20-period on all the time frames that I look at, that we have a very good chance for extension. It's the first thing that I mentioned. So if you look, we're above the 20 on the 5. We were above the 20 on the 15 at 8:30 in the morning. We were sitting above it. We were above the 20 on the hourly. You can see that here's where we were on the hourly. Let's see, 8:30 a.m. Where were we? 3, 4, 5, 6. There's 8:30, and you can tell we've already extended well above. And the same thing for the 240. So once again, I have some filters just by going through a quick checklist. I know I'm not looking short. I'm looking for my long side setups. And I know I have all my time frames in my direction, guys. And you know what I'm looking for is I want everything to be pointed in this direction. And then I don't want to fight this. I want to get on board to carry this momentum up. That is what I am looking for when everything is lining up in this fashion, right? In order to be short, I want to be underneath all of these moving averages. And then what do I want? Ideally, a counter rotation in for a trade to the downside. However, in ES, the majority of the time, I am looking long. Even in down markets, I'm looking long because this pattern right here, if you can figure out and nail it down, which we have in our room, how to get these U-turns hooked up, right? You can get paid very, very nicely, and it's fun to be able to nail those turns. And it's also fun to be able to identify, hey, we know that all the momentum's to the upside. We know we gapped up. Let's go capture some of this P&L on the push to the upside, right? So again, first entry, second entry, right, to the long side, and then there's a momentum setup here. And if you'll look, this is an impulse move to the upside, right? So we had the impulse move. We're above the 20 on all time frames. And then on the 5-minute on my, so this is my custom setup on my momentum indicator. And you'll see here at just after, here's 8:30, here's the open, 24-hour chart. Okay, and then finally, you can see right here, right before 9:30, that gave us our last, that was our last setup for a long side entry, and you can see that gave us a perfect entry for a push to the upside, right? So again, folks, the reason why we're not scattered or running around trying to figure out every single market is because we already know what we want to see our setups look like, right? And then as the market gives us those setups, we know that even though every trade may not work, remember, even with a 99% odds of a win, right? Your odds of the next trade working are always 50-50. There's zero question about that, right? Because you have one on a 99% win rate, you'd have one randomly distributed loss somewhere through there, right? And the reality is I'd rather choose win rates that are closer to 70 and 80%, right? And even at 70 and 80%, that means out of 100 trades, I have 30 randomly distributed losses. I have to know that some of my traders are going to be losses. We don't trade, no one trades perfectly because no one can tell when those losses are going to be distributed, right? Anyone who claims they can is full of it. So anyway, those were our setups. And then we decided, if you look through the course of the day, there was one more setup, and that was the 50-60 retrace. And if you look, we got tick divergence. So first we had tick divergence right into that trade. Actually, that wasn't even 50-60. It was holding above the 50-60. Let's see. 50-60 came over to the left. Okay, so if you look, here's the 5-minute tick divergence right in here. Very easy to spot. We were already done for the day. I did not take this trade. And then you can see the first punch into the 50-60 for the day. Unable to close behind the 62 retrace. Big sign that buyers are in control. However, right, we'd already banged our money up, banged out a pretty good P&L over here, and you know, these bars are all 1 point in rotation size. Yes, the trade worked, but you had to hold this for an hour to get this paid here. And if you weren't Johnny on the spot and exited, you came right back to where you were. This, okay, so remember, part of the deal being a sniper, right? You're not, when you're a sniper, you're focused for your specific setups, right? You're not trying to shoot everything. You know, you don't have a Gatling gun. You have a sniper rifle. You're looking for a very specific setup. You're waiting till it all lines up. When it all lines up, you pull the trigger. And then you stay silent. You let the trade play itself out, either stop you or hit you. And if you have your statistics lined up correctly, you know which are your high odds trades, and the majority of the time you can have an expectation of hitting a profit, right? And you know you have the proper stop in there so that when you do get stopped and you have a process for being stopped, you know, stop, reorganize, go back to your trade plan so you're not over trading, you're not drawing down unnecessarily. Okay, so let's jump over to CL. So this morning on CL, even though, so we can find it here real quick. So as I posted last night, CL made an impulse move to the upside. You can see that on all time frames. CL made a really a nice move here and punched in, right? However, part of my process in determining whether CL is in momentum or if it's in balance is by figuring out whether we're trading above or below London high. And immediately, so let's go to the big time frame by time frame, right? As we come into the US pit session, everything is pointed up, everything's above its 20 period moving average, which is, again, I don't have any particular affair with 20 period. You can make it 21 period, 19 period, I don't care, but it's pointed up, right? So same thing with the hourly. You can clearly see, and I pointed this out last week, we've closed above the hourly, and as long as we're above on the above on the 240, and the reason why you want to focus on one side of the trade, whichever side you're on this 20 period moving averages, the easier move is when you're on the upside or the downside, not the harder move. And our focus is on the easier move. And again, this morning when we came in, this was just a pullback to the 20 period, and you can see there's a response out of it. So the first question we're asking is, once we get in there, is are we in momentum or not in momentum? So at 8 a.m. immediately we failed to close above and hold above London high, reject back in. What's the first move that we make? We move back to the 50-60, right, and get a rotation out of it. Now this came into my first setup for the day. However, my indicator serves me no purpose, no useful purpose when we're in balance. So I know so think about the advantage there, right? As soon as I had determined, hey, we're inside London high, we're inside London low, do not look for momentum setups. I immediately have an advantage, and I have a second playbook I can go to, which is look for balance setups. Balance setup is first move into the 50 retrace. Now, I need certain setups that we did not get here, right? We did not get here, and so you had to decide on that move into the 50-60 if you're willing to take the risk. I thought this was an okay trade here, not fantastic, and you were able to get a small profit. Then you can see we rolled back, and then once we closed behind the 62 retrace, it was almost certainly a sign that we were going to push all the way back to London low. And then you can see again, London low rejected off of London low and gave a nice push back up. And you might say, well, Simon, that wasn't very much money. But if you look at each of these moves, that's a move from 49.59 roughly all the way across and all the way down into the mid, right, to start with at 48.20. From 48.20 rotates almost all the way back up to 49.20. Almost all the way back to 49.40, and from there, from 48.77, again, the entry is not to buy it in a free fall, but once we have confirmation that we're turning, right? But you had potentially a trade there from 48.80 all the way back up to 49, and you know, for me, 6, 7, 10, 20 ticks, that's good money, and that adds up when you can hit it at a consistently high rate. So the key there was figuring out whether we were in a high odds momentum environment or in a lower odds balance environment, and which playbook we were working off of. And so the only trade we really focused on today was this trade on the mid. This trade came too close to, it came after pit close, and I generally try to wrap up my CL trading before 11 or 11:30 Central Time. And so there was no trade over here for me today, but that's all right. I know that my process works, and I'll be able to use it in the future. Again, the way you get consistent, the way you make money in the market, having a process, having a method for modifying that process, but also checking your trading decisions against that process and making sure you're staying true. It doesn't do you any good to have a process and an edge if you're not actually executing that process and an edge. So that's my that's my 2 cents. That was our trading day. We had a good day in ES. We had an okay day in CL. And what we really look for is our momentum trade in CL. It just didn't set up today, right? But maybe it will now that we're all hung up here. If we can get the larger time frame moving averages to start to turn, right? And we can get below the 20 period moving averages on the higher time frames. There's plenty of room on the downside. Going back to the volume profile chart, if I can find what I did with it. Ah, there we are. Let me move this down. Okay, so on higher time frames, obviously ES buyers are in control there. You have to get below and hold below 2380 to 2375 to start to do any damage. Buyers are in overall control. Okay, on the NQ, buyers are clearly in control here. There's no damage done. It's going to take some work on the downside to get sellers to really get at all panicky in any way. Doesn't mean it can't happen. I'm waiting for them to show some sign of wanting to go down before I put any money on the short side of the trade. And then finally on CL, you can see we've made a really nice advance at this point. And also, importantly, I thought 49 would be, this area down here would be a pretty good area of support resistance. This is from the video from last night. You can see once we broke this downtrend, buyers really came in, and I'm always interested, just from a homework standpoint really quick, to go back and see what happened at 49. So the way that I do that, just so you know, and this just as a side note, whenever I think something will work out as X, right, I have so many screens here. Let's see if I can find this real quick. Okay, so what I always wonder is, well, what happened at 49? I thought 49, from a process standpoint, would reject, right? So we can go look at the 15 minutes, and here's 49, and you can see, look what happened when it got to 49. So this is last night, right? We pushed up, 48.65, push, 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 and you can see people tried to reject underneath that 49. Do you see those two 15-minute bars there? Right? I'm talking about this and this. They actually tried to hold it below 49. This bar closed above, and once it did, you could see all these people, whoever tried to sell here below 49, plus the prior sellers from when we broke down, all came in to give it a big push to the upside. And you can see that acted as support all afternoon until we finally got in late in the day and broke to the downside. It's very fascinating how that 49 came into play. And now you can see we're trapped exactly underneath that 49. So it could be that we've now switched the tables, right? That this 49 was a trap point for shorts, right? They came in, they got trapped, but now they could have flipped the table. And now it's very possible that late entries into this 49.60 to 49 area are now trapped below. And if we hold below that 49, we could extend back to the downside. So I'm always interested, and you had a pretty clear sign, right? You knew, hey, if we don't hold below 49, right? If we don't hold below 49, we're going to roll up to the next resistance point, and that's exactly what happened. And you can see, you know that it was an important area because it gets back tested 1, 2, 3, 4, 5, 6, 7, and finally on the 7th time it breaks, right? So that's how you know when you're doing charting and an area gets busted. You can always go back and look and go, well, how do I know I was doing it right? Well, if it gets back tested 7 times and holds, right, it was an important area. It just didn't hold to the downside. It ended up holding to the upside. And it's now clearly become an important trap area. So hope everyone had a wonderful day. If you would like to come and see how professional traders trade, and you'd like to learn to trade with an edge and a process, avoiding the boom bust process, right, which is so painful, avoiding big drawdowns, right, by having a built-in process, come look at what we're doing in the room. There's a lot of really great trading education going on there. You can email me at tradeandperform@gmail.com. I will tell you the cost of the room. It's no big deal. It's $95 a month. That's 2 ES points, right? And that includes getting daily support resistance charts and the live trading room. I'm pretty sure it's the best deal being offered out there. So I look forward to seeing everyone in the room again. We had a great day, and the message will be consistent and the same. Identification of the type of market we're in, follow process, control losses, control daily stops, and understand what you're trying to do over the course of 1 month, 2 months, 6 months, and a year so that you can hit your targets and build your trading account. That is the message. Anyways, I hope everyone has a great night, and I will see everyone tomorrow.